All right, so we had another crazy, interesting week in the markets. We had the PCE print come out on Friday. We have the jobs report coming out next week, which is going to be big news. That will probably set the expectations for how much rates are going to get cut coming up in September. And then we also had Nvidia earnings. So I'm going to get into all that. First things first, if you like the video, please like, comment, and subscribe. Getting right into it here, the first thing is the stock market. It closed up on the months. For the week, the S&P was up slightly. The Nasdaq was actually down. Mid caps did well. Small caps, I believe, were up just a tiny bit. And then the equal weight index also outperformed. So the first thing of note here is the recent trend has continued, and that is mid caps specifically have been the big outperformer recently, and that continued this week. I think that probably continues over the rest of the year, but I think small caps probably get in on the action as well. If we look at this news here, stocks ended a wobbly week with a volatile month on a high note as the latest reading of the Federal Reserve's preferred inflation gauge bolstered rate cut hopes and kept the central bank on track for a pivot in September. So the PCE, which showed prices in line with expectations, quote-unquote core inflation, which strips out food and energy. Is it an actual good, accurate representation of inflation? No, it isn't. But that's the one that the Fed pays attention to, so we're going to have to go with it. Rose 0.2 month over month. As expected, the annual rate came at 2.6%, matching June's level and undershooting the 2.7 forecast, hence why stocks closed up on the day. So on Friday, yesterday, stocks, they actually opened the session down, but later in the day, they rallied pretty strongly because of this news. And getting right into it, the S&P closed very close to its all-time high. It closed at 56.48, and the all-time high is, I think it's like 56.67 or something along those lines. If you look at the SPY ETF, we closed at 563.46. The all-time high is 564.86. So we are literally probably like 20 basis points away from an all-time high in the S&P. The Nasdaq is a ways off that. If we look at the Nasdaq here, let's pull that up. The Nasdaq, like I mentioned, was down on the week. The Nasdaq, the high on the QQQs was just over 500 at 502.96. It is actually 5% below its all-time high. So that kind of piggybacks on the recent trend of the value side of the market outperforming and those mid caps and small caps also outperforming. Hence why also the equal weight S&P hit an all-time high on Friday. So this is what I've been saying for a while now. If you look at the equal weight S&P back in September topped out at 171.71. It is up to almost 176, and it's up about 2.4% since the S&P all-time high. So this is what I brought up, that I've been saying this for probably a month or two now, that this is what I think is going to happen. And especially with rates coming down, I think that it's a safe bet. So I have been looking at small caps and mid cap stocks specifically over the past month or so, really. But it's very recently I've been trying to screen, and this weekend I'm going to do a little bit deeper of a dive and I see if I can find anything, because that's where the value is in the market right now. If you look at the historical price to earnings on the mid caps, the small caps, and the large caps are clearly overvalued. The mid caps, I believe, are about fair value, maybe a tiny bit below, and the small caps are actually slightly below their historical PE. So that is where the value is in the market right now. That doesn't mean there isn't some large cap companies that are overvalued and no small cap companies that are overvalued, or sorry, no large cap companies that are undervalued and no small caps that are overvalued. Obviously those exist, but we're simply talking about the averages here. So that is what I am going off here. Also, Bitcoin was down on the week, and I don't think it necessarily was for any particular reason. I think the stock market was down a little bit, and I think that probably caused it. But another thing when it comes to Bitcoin is the Mt. Gox selling. I thought it was over, but from what I can tell, it's not actually quite over. I think that they started out with about 180,000 Bitcoin, and they're down to like 10 or 20,000 left. So that was about a week ago that I seen that, though. So they got to be getting pretty low. And I've said for a while that I think the next month or two is going to be the turning point. If we get to the end of the year and Bitcoin's still chopping around where it's at right now, that would make me a little bit concerned. Long term, still not, because something fundamental would have to happen. But near term, if we go the next 2 or 3 months without like a recession or like a more major stock market crash, obviously that would be bearish for Bitcoin over the short term. But if we go without those things happening and Bitcoin isn't up, that's going to make me a little bit concerned. But long term, again, something fundamental would have to happen. So the big news as far as earnings go this week was Nvidia. And if we look at Nvidia here, Nvidia released good earnings. Like they beat pretty much all expectations. The problem is that they didn't beat expectations by as much as people expected them to do, which obviously caused them to sell off. They were down quite significantly on the week, about 8.5%. Hence why I think the Nasdaq sold off, is that the Nvidia is the second or third biggest, depending on where exactly Microsoft and Apple are at and on a particular day. So as far as Nvidia goes, I've said time and time again, Nvidia is way, way, way overvalued. They're way too expensive. If they fell 50%, that's probably what it would take for me to get interested. A PE of like mid 20s, high 20s, that's probably when I would get interested. A price of sales of 30, that's just absolutely insane. They're way too expensive where they're at right now. There's no way they're going to grow into this valuation. Now, does that mean that you're going to lose money if you put in money in Nvidia now and wait 10 years? I doubt it. I don't think that's going to happen. What I'm saying is that you're probably going to underperform. So that's something I definitely would be concerned about. And another thing that I kind of mentioned, but I didn't go into deeper, I was looking at stocks, just kind of going over my watch list. I got about, between my watch list and companies that I actually own, I have probably 100 companies, give or take. And almost all of them, in fact, basically every single one, is either about fair value or overvalued. Like I couldn't find one that I thought this company is clearly like more than 5% undervalued. There's the odd one that I think is a tiny bit undervalued, but I couldn't find one that I'm like, man, this company is a screaming buy right now. So that is something that I definitely would be concerned about going forward, that the market is clearly expensive where it's at right now. But like I mentioned earlier, I still think there is some value to be found. But if you're an index investor, I would temper your expectations, especially if you're buying the NASDAQ and the large cap heavy growth side of things. So next company here is BMO. This is Bank of Montreal. And they missed earnings and revenue. They released pretty shaky earnings. Not the greatest news as far as they go. If you look at the Canadian banks, they definitely have had a rough little recent go of things. If we look at Royal Bank actually beat earnings, but they still raised some concerns going forward. They were actually up on the week, but they kind of basically said, yeah, we're treading cautiously going forward because the Canadian economy definitely is not as strong as the American economy right now, at least in comparison. So that's something I definitely would be a little bit concerned about. And I'm not necessarily a fan of the Canadian banks. I think they're a little too exposed to real estate, but I do like EQ Bank, even though they technically do have some real estate exposure, obviously, as well. They're just growing way faster, and that's why I like them. The next one on the list here is CRM. This is Salesforce. They did beat earnings, although they were down on the week, and I think that probably was due to a bit of a tech sell-off we had this past week. The next one is Affirm. They're one of the big buy now, pay later companies, and they beat earnings and revenue. They released very, very good earnings. They're up actually quite nicely on that news. They were up actually they were up a lot on the week. How much were they up here? Wow, they were up 36% on the week, which is that's crazy. That's absolutely crazy. But the problem with them is they're still not making money. They have negative earnings. So I've said time and time again that buying companies that don't make money 99% of the time, it's not a good idea. So if they can find a way to become profitable, I probably would get interested in them. But until that happens, I'm not interested. And let's check out their valuation here, just out of curiosity. It's probably pretty crazy. Yeah. So I mean, price of sales of 7, that's not crazy, but a price of free cash flow of 48. I mean, obviously their earnings negative, so you can't really measure that. Too expensive where they're at right now. I definitely would not be buying them. They're projected to grow very nicely, but again, we've seen company after company after company that is growing very nicely that never becomes profitable. And if they never become profitable, they're going to go out of business. So that's the reason why I say 99% of the time it's not a good thing to buy a company that doesn't make money. Next company, CrowdStrike. They beat earnings and revenue, although they did lower guidance a little bit. They were the company that caused that big outage recently. So that's something that is kind of odd that they still managed to beat earnings, but I'm not sure how much that would actually be reflected in this round of earnings. So we'll have to see how they do. They're a solid company. I don't buy them just because I think they're too expensive. Although also now I think that the recent issue probably is going to cause some companies to go away from them, which is also concerning. So they're kind of an avoid in my opinion. The next one is Veev Systems, VEV or VEEV. Beat earnings and revenue. This is a company I have on a watch list. I definitely would buy if they were cheap enough. They just are not cheap enough. So that is Veev. The next one on the list is Best Buy. Best Buy also released very good earnings. They beat earnings. They raised guidance. This is a company that I think they're okay. They're not quite good enough in my opinion. They're popular amongst dividend investors. They got a nice yield. They're growing that nicely. The payout ratio is not even that bad. Honestly, they've outperformed the S&P over the last decade as well. This is one that I probably would keep an eye on. If I look at the valuation, it is quite a bit above their historical valuation, although not necessarily crazy compared to the market. This is a watch and see. To me, they're not going to grow enough to be worthwhile, but they're half decent, which is why I watch them. PLAB, they did beat earnings. This is a small cap semiconductor company that I own. Solid company in my opinion. The next one is Lululemon. They released pretty shaky earnings. Beat earnings, missed revenue. They lowered guidance. They were down quite a bit on the week. This is one that a lot of people have been buying recently because it's hit a new 52-week low. I'm not necessarily a fan. I think they're a decent company, but I think competition is just so fierce amongst clothing brands that I'm not necessarily a fan of any of them, which is why I don't own any of them. And the last one is EQ Bank. Speaking of Canadian banks, they did beat earnings and revenue. They were actually down a little bit on the week. I'm not concerned. They have good guidance. They're growing their dividend like 20% per year. That's all I care about. They're still growing very nicely. Earnings, revenue, all that stuff is still growing nicely. It's not crazy good, but for a bank, it's very good earnings. And I mean, look at that compounded annual growth rate to their dividend over the last 3 years, 36%. So that's exactly what I like to see. I mean, if you would have bought this company back in, let's say, the start of 2021, let's see here, just out of curiosity, you'd have about a 4% yield on cost. So for a company that's growing as fast as they are, I mean, that's roughly, I think, when I first bought them. So this is a company that if you buy and you hold it for, let's say, 10 years or more, I think you're going to have a yield on cost that is in the double digits, and a company that's still probably growing comparable to the big banks. So that is exactly what I want to see. That is what I like. And I think that their form of banking is the future. Like, why? In-person branches are becoming less and less common. I know in the city I live in, they've closed like 2 of them from the big banks in the last like year or two. So, and I mean, it's not even that big of a city. So that's something that I think is more or less the future, is their model. And they're doing it better than virtually anyone else. I mean, if you look at their efficiency ratios and their profitability ratios, their return on equity, all of those numbers are very, very good. Very good. There isn't a lot not to like here. The one thing that I always point out is that they're issuing, they're not issuing a crazy amount of shares, but they are issuing shares, which is something that I don't like to see, especially when they have an earnings yield as high as they do of 50 or almost 13%. Like, why are you issuing shares? To me, that makes no sense. But there probably is something that I'm missing there. So anyway, that is what I wanted to bring up today. If you liked the video, please like, comment, subscribe, all that good stuff, and stay tuned for more.